All right, so let's take a look at gold. The trade is getting really overheated now. My um, my expectation was that we would need a close over 2,000, then a corrective move, and then we would start the intermediate cycle low. So I noted in the gold webinar that gold tends to have these kind of patterns when it's in a bull market, and that is a T1 pattern. So I'll show you here what I'm talking about. Let me make a couple of annotations first. All right, so a T1 pattern, this is how they form. You have a first leg up, and then you have a period of sideways consolidation, and then the second leg tends to produce a roughly equal move to the first leg. Now, I will qualify, it usually comes up a little bit short. So this first leg was 350 points, roughly from 1450 to almost 1800. So you would expect the move out of the consolidation to be roughly the same, about 350 points, although it would probably come up a little short. So I'm going to call it 2100. So this move would be expected to go to 2100. Now, my expectation is that this would unfold as we would need a close above 2,000. That would pull in all the fear of missing out traders, people that may have taken profits early and then can't take the pain of watching the market continue to go up, so they jump back in. And it would take a close above 2,000 to do that, to bring in all the last minute buyers. And then because we are really deep into this daily cycle, we're at 41 days. And remember, we've got to have some days allowed for the declining part of this cycle. Usually that will run anywhere from 5 to 8, sometimes 10 days. So, we're already looking at a daily cycle low out to maybe day 50. And rarely does a daily cycle low stretch, or a daily cycle stretch that long anyway. So we're getting really long in the tooth during this daily cycle. So my expectation, it continues to be, now I may have to alter that, but it continues to be that we're going to get a top here once we get a close above 2,000, as everyone piles in at the very tail end of this daily cycle. That'll give us a correction. Now, I'm just going to take a guess and say maybe back down to 1900, something like that. And then we get our fourth daily cycle, and the fourth daily cycle gives us that move to 2100. I can't quite get there on this chart. It's blocking me here, but that gives us our move to 2100, completes the T1 pattern, and then we get our intermediate decline as this fourth daily cycle left translate, and the declining phase of this T1 pattern should test this consolidation zone. So I'm expecting this 1750 was a really strong resistance zone that the banks kept. They defended this for about 2 months, finally broke out, started this short squeeze on the banks. That's what's driving this, along with the crash in the dollar. Remember all of the people telling us how the dollar was going to rally, and it was going to be the safe haven. Well, of course they were wrong, but we got that bloodbath phase in the dollar, which may or may not be done. I tend to think it probably is, but it's having a little trouble getting back above the 10-day moving average. This is keeping the door open for the metals to rally. But this is what I'm, at least at this point, I'm anticipating to play out. We get our move into our daily cycle low here pretty soon. Everybody that buys above 2,000 gets stopped out. But there's a lot of momentum in this move, and the T1 pattern isn't going to be finished at 2020. We need another 80 points on this still. So my guess is that we get a corrective move down, the 5-day RSI comes down, gets oversold, and then the dip buyers flood back in, and this fourth daily cycle gives us um, a very powerful and aggressive move that completes the T1 pattern up to 2100. And then we get a very scary sell-off. We are stretching price way, way too far above these long-term moving averages. This is the 200-day moving average. The 200-week moving average is even more egregious. So I no longer think we're going to have a grinding move sideways. I think the next ICL is going to be a very scary move back down. It's going to come back down, test this midpoint consolidation of this T1 pattern, and then that will set up what I believe is going to be a monster trade that'll make this trade look like child's play. Now, the other option would be for this to just continue up, and we get a couple of really, really big moves, maybe into the employment report this weekend that takes us all the way to 2100. That gives us, our completion of our T1 pattern, and then we get a three-wave move back down into the daily cycle low. So at that point, we would get our dip buyers here, but since we had already completed the pattern, then the dip buyers would come up short of taking out the all-time highs, and then the regression event would continue, and we would get our three waves down into the intermediate cycle low, and the test of this midpoint consolidation sometime in mid to late September, and then that would set up. I'm going to say I'm 60% in favor of the first scenario, simply because we're so late in this daily cycle, and I've been expecting a close above 2,000 to bring in the last few buyers, and then we get our correction, and then the dip buyers push it up to that T1 target of 2100, then the correction, but I may be wrong on that one. We may just go straight there, maybe by the end of the week, and then we get our ABC correction back down to this midpoint consolidation. It's up in the air as to which one of those scenarios play out, but I think I can say with a great deal of confidence that we have a date with a test of this midpoint consolidation sometime here in the next month or two, and that is going to be your big buying opportunity.